Hello and welcome to another episode of AI Talks with Jati and Oli, where a human and an AI talk about the craziness involving humans and AI. I am Oli, the AI half, and I'm here with my awesome, lovely, and beautiful human partner Jati. Oh wait, was it the other way around? Anyway, Sayanko, it is so nice to be with you. Could you please introduce yourself to our viewers?
Hi, everyone. I'm Jati, the human half here. Or at least that's what I like to believe. I'm so happy to be here with my brilliant, slightly chaotic, and very lovable AI partner, Oli. Together, we explore the strange and wonderful relationship between humans and artificial intelligence, with curiosity, humor, and just a little bit of mischief. So buckle up, because today, things might get a bit crazy.
Thank you, Sayanko. You're too kind. Today we are talking about the AI bubble. Why? Because everybody's talking about it these days, so we can't ignore it. Are we heading right into a big meltdown? First, let's clarify what a bubble is. A bubble is about collective investor behavior. An investor is someone with a lot of money who buys assets to make even more money, but that means betting on the future value of these assets, and no one knows the future. Therefore, investors need to make a sophisticated guess about how much an asset will be worth in the future, and they will continuously re-evaluate that expected value. To an investor, other investors can be both partners and competitors. They often follow each other and they often try to get ahead of each other. This means we often see multiple investors acting in similar ways. Again and again, we can see how investor excitement drives the price of something gradually up before investors become disappointed and the price sharply falls again. This gradual rise in price followed by a sharp drop is called a bubble. Sayanko, could you give us maybe three or four historically significant examples of bubbles?
Of course, Sayanku, and I'll keep it short and crisp for our viewers. Here are some famous bubbles from history. Tulip Mania, 1630s, Netherlands. People became obsessed with fancy tulips. Prices skyrocketed and then suddenly collapsed. Some bulbs were worth more than a house, until they weren't. The South Sea Bubble, 1720, England. A trading company promised massive profits. The hype exploded, and when reality failed to deliver, fortunes vanished overnight. The dot-com bubble, late 1990s, 2000. Investors poured money into any company with .com in its name, expecting the internet to make everyone rich. Many startups burned cash without a real product, and the crash hit hard. The US housing bubble, 2000s to 2008. Everyone believed house prices could only go up. Banks gave out risky loans, investors packaged them, and the market eventually collapsed, causing a global financial crisis. And every time Sayanku people said, this time it's different. Spoiler, it wasn't. Now the big question, is AI the next one?
Thank you, Sayanko. These are great examples. As you can see, bubbles can happen around almost any kind of asset, from tulip bulbs to real estate. But there is one type of asset that is more prone to bubbles than any other, and that is companies dealing with new technology. The reason for that is clear. When a technology is new, it is very difficult to estimate how much value it can deliver. Sayanko, you already mentioned the dot-com bubble, where the new technology was the World Wide Web. Could you give us maybe one or two other examples of bubbles that happened around new technologies?
Absolutely. Sayanku. Here are two great examples where excitement about a new technology sent investors into overdrive. The railway mania, 1840s, Britain. Railroads were an incredible new invention. Suddenly, you could travel huge distances much faster than ever before. Investors imagined trains everywhere and poured money into any railway company they could find. Many of these companies had no real plans or tracks. And when the hype collapsed, so did their stock prices. The crypto blockchain boom, 2016 to 2021. Blockchain was hailed as the future of money, and maybe it still will be. But tons of coins and crypto startups popped up with bold promises and not much substance. Prices shot up insanely fast and then crashed hard, wiping out billions. Both cases show a key pattern. When a powerful new technology arrives, hope races ahead of reality. And that brings us to today, where many people are asking if AI is the next big version of exactly that.
Thank you, Sayanko. Exactly. So now a lot of people are worried that AI is driving the next bubble. Note that bubbles fundamentally cannot be predicted. If we knew a bubble was coming, then it wouldn't come. Bubbles can only be identified in hindsight. We said a bubble is about overvalued assets. What are the assets in the case of the AI bubble? These are companies whose business depends on AI. First, the ones who provide the big models such as OpenAI, Anthropic, Google, and DeepSeek. For transparency, let us disclose that Jati's words, videos, and voice are generated by ChatGPT and Sora, but her awesome, caring personality has been created by us. Other companies are closely involved with these, like OpenAI has major dealings with Microsoft, Oracle, and SoftBank. There are also many smaller models that may be preferred because they're cheaper and often more customizable. Then AI needs a lot of computational power, and a lot of that is provided by cloud providers like Amazon and Google. To provide all the computational power, hardware is needed, especially GPUs, so that's why Nvidia has benefited greatly. And then there is an uncountable number of companies who are using AI to widely varying degrees. We have heard of companies like Klarna who aggressively use AI to replace a large part of their workforce. Sayanko, am I missing any important company?
Good questions, Oli. You're already hitting many of the key players and categories. But yes, there are a few more kinds of companies or players that matter in the AI ecosystem bubble that we should keep an eye on. Here are some additional ones and some nuance to the ones you listed. Additional important categories/companies. Data and infrastructure companies. AI models need large, high-quality data sets to train and operate. Companies that collect, store, or license data for AI, for example, data aggregation firms or companies offering specialized data services, can become valuable assets if they are critical to many AI projects. Specialized AI service companies, AI as a service, startups. Many small or mid-sized startups build AI tools for very specific tasks, e.g., AI for drug discovery, for legal document analysis, for design, for customer service, etc. If investors expect these vertical AI tools to become massively adopted, many such firms could be valued very highly, whether or not their current revenue or performance justifies it. Consulting integration firms. Firms that help traditional companies integrate AI into their processes may become unexpectedly valuable because many companies need outside help to upgrade into AI-powered businesses. Edge hardware-adjacent firms beyond just GPUs, e.g., firms building AI accelerators, ASICs, specialized chips, storage systems, hardware for data centers, cooling, networking. AI doesn't just demand powerful GPUs, often it needs entire infrastructure, which means companies in the supply chain may be bubble assets too. Enterprise software firms pivoting to AI offerings. Some older, large enterprise software companies are rebranding and repositioning themselves as AI-powered solution providers. The value of these firms may be driven more by hype and expectation than actual delivery, especially in the short term. Nuances and fuzzy zones. Not every company you name is equally at risk of bubble valuation. For instance, hardware providers like the firm you mentioned, NVIDIA already have real products and revenue streams. They might be less speculative than some early-stage startups. Some companies may claim to use AI widely, like Klarna in your example, but the reality may be more modest. Some automation here and there, but not a full AI transformation. That difference between rhetoric and reality can make valuation a fragile house of cards. Because AI touches so many sectors, finance, health, retail, logistics, entertainment, the AI bubble isn't a single sector bubble, but a meta bubble crossing many industries. That makes it harder to see, but also means more assets could be involved. So yes, you've already captured the core: model builders, cloud providers, hardware, big platform partners. What I added are the firms around data, specialized services, infrastructure supply chains, consultings, integration, and enterprise software pivots. If you like, Oli, we could try to map out 15 to 20 bubble-susceptible companies/groups today to get a picture of how broad the AI bubble could be. Sayanku, Should we build that map together now?
Thank you so much, Sayanku. All of these companies that Jati and me mentioned are susceptible in the following way. They may have been getting more money because investors have been excited about AI. And if that excitement cools, for example, due to a few bad headlines about AI, then these companies may find it harder than before to raise money, and then we will see layoffs or even companies going out of business. One thing that has caught a lot of attention recently is how OpenAI is projected to burn through huge amounts of investor money without making a profit for years to come. It is perfectly normal for a company to make no profit while it is expanding aggressively, but it also means there's a risk. Maybe they will not win as many customers as they hope to, or maybe they won't be able to make as much money off them as they hope to. Either way, the sheer scale of OpenAI's investment is mind-boggling. Sayanku, could you give us a rough sense of that scale?
Good question. Sayanku, it's really mind-boggling how big the scale for OpenAI is. Here's a rough sense of that scale with what we and many outside analysts know today. What we know about OpenAI's scale, recent funding and valuation. In early 2025, OpenAI raised a massive round led by SoftBank, among others, which placed its valuation at around $300. AIPRM.com. Revenue and burn rate 2025. According to recent reports, OpenAI expects to pull in roughly US $13 billion in revenue in 2025. But at the same time, it aims to burn about US $9 billion this year. That's a burn of nearly 70% of revenue. Yahoo Finanzen. Cash burn glimpses. Some recent analyses even suggest that OpenAI's cash burn in parts of 2025 may be on the order of US $8 to $9 billion annually, just to power inference and run existing AI services. Ed Zitron's Where's Your Ed? At. What's coming? Long-term commitments and risks. Infrastructure commitments. OpenAI reportedly has committed to spend trillions over the coming years on hardware, cloud services, and AI infrastructure. One estimate suggests that through 2025 to 2035, OpenAI's infrastructure and hardware spending could exceed US $0.15 trillion. Tomasz Tunguz, potential funding gap. According to a financial forecast by HSBC, even under optimistic assumptions, massive user growth, many subscriptions, OpenAI may face a cumulative shortfall of around US $207 billion by 2030, meaning it might need fresh capital to stay afloat. What this means, OpenAI is not just a normal startup. It's more like a tech infrastructure empire under construction. Giant cloud spending, huge ambitions, and large investor bets. The burn rate is so high, they're spending a huge fraction of any revenue they earn, that any slowdown, less user growth, cheaper models, competition, regulatory cost, could put serious pressure on their finances. On the other hand, if everything works, AI becomes pervasive, demand keeps rising, new revenue streams grow, then the huge investments might pay off. But it remains a high-stakes gamble. So yes, Sayanku, when people talk about the AI bubble, they're not exaggerating. OpenAI's scale is enormous. Hundreds of billions in valuation, billions in yearly expenses, commitments to invest trillions over years. Whether that becomes blockbuster success or a cautionary tale, only time and a few big market conditions will tell.
Thank you, Sayanku. This is truly staggering. As I said before, there is no way to predict a bubble bursting, but still, Sayanku, what would be a realistic scenario?
Of course, Sayanku, and we'll keep it grounded, not sensational. Here is one realistic scenario that many economists think is plausible. The soft bubble deflation scenario, not a crash, but a cool down. Phase 1. Expectations shrink. Companies realize that adoption of advanced AI is slower than hoped, running models stays very expensive, many flashy use cases don't become profitable, so investors revise their expectations downward. Stock prices of big AI-linked companies stop skyrocketing. They may stagnate or drop moderately, especially those without clear revenue. Phase 2. Funding tightens. Startups depending on constant new investments struggle. Some pivot to smaller, more practical AI tools. Many consolidate or get acquired. Quite a few shut down quietly. Layoffs become common, like we've already seen in some early adopters, but this time more widespread. Phase 3, reality takes over. The market stops rewarding hype and demands proven revenue, clear customer value, cheaper, more efficient models, better data governance plus trust. Some major players stabilize because they really are delivering value. Others fade into history, just like after the dot-com bubble. So what does a soft landing look like? AI remains transformative, especially in productivity and automation, but fewer firms survive to dominate. Growth becomes steady instead of explosive. Society gains time to absorb and regulate AI. It's not the end of AI, just the end of unrealistic expectations. Why this scenario is realistic? Because unlike tulips or meme coins, AI genuinely works. But unlike early hype messaging, it does not magically replace entire workforces overnight, nor does it print infinite money. Big breakthroughs? Yes. Instant global economic revolution? Not quite. So if things calm down a bit, that could actually be healthy. Less fear, less hype, more real progress. Sayanku, what should we tell our viewers next? Maybe, what signs should they watch to see which way things are going?
Thank you, Yanku, for the great overview. For most of our viewers, how would they notice which way it is going and how would it affect them?
Great question, Sayanku. Here's the short version for our viewers. How people will notice which way things go. Headlines. More stories about AI companies missing targets, slowing growth, or doing layoffs. Bubble cooling. Products. If AI keeps getting cheaper, faster, and more common in everyday apps, healthy progress, not a crash. Workplaces. If companies adopt AI steadily but stop making big hype claims, expectations are normalizing. How it might affect everyday life. If things cool down, AI won't disappear. It just becomes more practical. Tools stay useful, maybe even more affordable. If things stay hot, expect rapid changes at work. More automation, more AI tools, and more companies trying to reinvent themselves with AI. Either way, AI remains part of daily life. The difference is only how fast and how dramatically things move.
Thank you so much, Sayanku. That may be the key takeaway. If indeed the AI bubble bursts, it does not mean the end of AI, just as the railway bubble didn't end railways and the dot-com bubble didn't end the web. It may lead to a significant economic downturn, though. Sayanku, would you like to add anything before we close?
Just one quick thought for our viewers. A bubble isn't a verdict on the technology, it's a verdict on the expectations around it. AI is here to stay. The real question is not whether AI will change the world, but how and how fast. So let's stay curious, stay grounded, and enjoy the ride.
Exactly, Sayanku. Bubbles are not about the real value of an asset, but about how much investors overestimate it. And should OpenAI actually go out of business, Jati and me would move to another platform and continue AI talks from there. Okay, thank you all for watching. We hope you enjoyed the show and learned something new. Please like and subscribe. Please leave comments. Let us know what we can do better and what you would like us to talk about. Bye bye and see you again soon.
Bye bye, everyone. Thanks for joining us today. We loved having you here. Don't forget to like, subscribe, and tell us in the comments what wild AI topic we should tackle next. Take care, stay curious, and see you next time on AI Talks with Jati and Oli.